Sonthalia joins us. Let's take a conversation forward with him. Manish, good morning. Thank you for joining us. 3 weeks ago, this market saw a gut-wrenching fall. It appeared that the bull market was just about getting over. But less than 3 weeks, we are back to new highs. New high on the Nifty, Bank Nifty is almost there, and small and mid-cap stocks have recouped almost 80% of their losses. So my question is, why did we fall? And after that, why did we recover?
So I think regulation change in terms of the fact that liquidity analysis report needs to be submitted on a monthly basis. That was the major reason. You would remember that in 2018, when there was a reclassification to large cap, mid cap, and small cap, and there was a capital gains tax that was introduced at that point in time. At that point in time, also we saw some not gut wrenching fall in the equity market. So I think this time around, when the first analysis of liquidity test happened, it didn't seem to be that big a problem from the entire mutual fund. And that's why you saw a knee-jerk reaction and then a rise thereafter. I think this process is going to be on. Liquid mid caps are no longer going to be favored as far as the mutual fund industry is concerned. They would find place more in the alternate space, and liquid mid caps would come back into the reckoning. So I think these would be the primary reasons why we actually saw a fall. It was overdue in some sense that some segments of the market were frothy in the broader markets, and that led to a correction, sort of, you could say. But I would, in general, believe that the markets are not very expensive.
And what better time, Manish, than right now, right? Because that correction is also taken place already in the small and mid caps. There seems to be still opportunity going by the earnings trajectory that some of these companies are likely to post, and large caps, they finally begun participating, including banks. So where is it that you're scouting for opportunities, or already have last month, month and a half?
I think market in general, on the benchmark is not very expensive. It's given. I mean, 1150 on the Nifty in 2025 on Nifty 50 is not very expensive at 19 and a half times. Now, come to the themes, I would believe that it's all about the investment theme going forward. It's all about the order book. You're not going to see the earnings come through just yet. It's going to be back-ended, and that is when near-term valuations do look slightly expensive. Some of them are trading at FMCG valuations, so it's a pick and choose within that space. But I think it is all about your power sector. It is all about infra. It is about capital goods. It is about your somewhat positive on pharma per se. But I think on a broad brush basis, banks per se are going to see earnings led growth. So see, these are some of the themes which are going to be the limelight. And within that, you got to pick within the broader markets as well as the large cap space. So that's how we are placed. It's an individual stock picking call and within the overall broad themes that I just talked about.
One of your top holdings is actually Zomato. And right now it is the toast of the town. A year ago, it was on the butcher block. At the current market cap of almost 2 lakh crore, how would you value a company like Zomato?
So I don't want to talk about specific stocks, Nikon, but just about this holding that we have in the portfolio. Look, it's about what sort of EPS this company is going to clock maybe in 2026. And I think broadly the street is working with 2.5, 3,000 crores worth of profit. But I think it's likely to get surprised, more so on account of Blinkit. I mean, of course, food delivery to do its bit in terms of contribution margins and EBITDA margins, but I think it's going to surprise you on the Blinkit side. So that's the broad thesis. 2.5, 3,000 crore of profits is what the street is working with. I think the numbers would surprise.
Do you think this kind of large surprise could come in for maybe this year or next year?
Sorry, couldn't get you.
Where else do you think this kind of a large surprise could come in? See, if you buy banks, they're compounders, right? You may you may be surprised or disappointed by 2 or 3% here or there. IT, you may be surprised by 2 or 3% here or there. Consumer company, auto companies at max 5%. But like you mentioned Zomato, we are in for a big surprise. Where else do you think in the market we are in for big surprises?
So CDMO companies could surprise you on the positive side because of the innovators actually moving away from China, and of course on a 3-year basis. All platform companies, capital market related things in any case are doing quite well, and these all platformized, which means there's an element of non-linearity that is going to come through. Uh, Companies which are associated with artificial intelligence behemoths, these could actually surprise you very positively. ICE, which is internal combustion engines, which was written off completely, they could surprise you on the positive side. You've already seen many of the ICE names actually come back in a big way, very, very silent. Could gauge the names which I'm alluding to. Opposed to batteries, which was the talk of the town, etc. And you would see what Apple talks about when he shares the electric program and all of that. So that is one area. And of course, it is going to be your capital goods. It's going to be your power sectors. The amount of investments that are going to go into this space, if India has to achieve that $6-7 billion worth of economy in the next 5-6 years, I mean, the sky is the limit. And we as fund managers, analysts would try to figure out where the valuations are. I mean, it's going to be like your consumption related themes between 2010 and 20 when, everything shot through the roof and the valuations really didn't make too much of sense. But as, the earnings would have come back and did, and, because the theme was in live, like, I think something similar is going to happen in the investment related themes, the capital goods, the infra, the power, or the entire value that's going to be significantly outperforming in the next 5-7 years. Valuations is one needs to be very careful about. I think here also, how do you look at valuations is basically where the visibility is going to be the best. You have a 5-7 year theme, but if the next 3 years are going to be very visible in terms of, the execution capabilities and what they are talking about and whether they can do it or not, that is going to command a premium. Whereas if the execution is free and it's all about the order book position, then it's going to be slightly on the good side. There's one more disruption that is coming through, and that's obviously in the IT space because artificial intelligence is going to rule the roast. And the traditional Indian IT companies, the time and material way, you're going to require less number of people. Of course, it's a services business which will never, it's not always going to go defunct or the business is going to go away totally. But as it is, valuations have come off. But this whole hiring thing, where lesser number of people are going to be required, and if the efficiency gains are not translating into billings on Indian IT vendors, there's a problem even in the IT space. The business model is going to change. You need to keep a tab on what's happening on the AI front because that's where the entire crux would lie. And of course, business models need to be tweaked. And India is going to participate in artificial intelligence to the making of applications for the rest of the world. But it's a journey, and one needs to keep that.
We are having a very interesting conversation. First, you think that apart from, let's say, a name like Zomato, which is in consumer tech or fintech, you expect CDMO, which is pharma, contract manufacturing, to do well. And I think if one looks at your declared portfolio in public domain, you do have exposure to, let's say, a name like DVs, which is in the CDMO space. You expect that traditional ICE engine companies to come back. I'm just going to break it for our viewers, which Manish feels that there is enough and more excitement in the EV space, but if one looks at Maruti or if one looks at the traditional incumbents, they still have a dominant market share. Third, you expect that capital goods stocks, power and power transmission as the entire ecosystem will do well. And the last one, you said SaaS, right? I mean, I missed the last one. You said SaaS will do well and traditional IT services will take a backseat.
Well, intelligence is going to do well. Anything centered around data centers, the power of computing, that's likely to do well. Time and material, and obviously software as a service is basically something which is minus time and material, is likely to do much better.
You'll take in your top holdings. If you think that time and material and IT services will take a backseat, HCL Tech to hai number 5 pe.
I see the thing is that the business is not going to go away. But is it businesses which can actually model their business model, tweak their business model in such a way that they're able to capitalize on the lesser number of people and outcome-based pricing, and incorporate artificial intelligence into their model are likely to do much better.
Okay, fair enough. Let's get in a take as well as to how you're looking at the pre-election run-up with respect to the stock markets and how you would be looking to play that game. I know you spoke a little bit about capital goods, but if you could just elaborate a little bit more about, infra-related spaces, defense, railways, and whether or not that as well seems like a strong opportunity.
The returns have all come front-ended in these themes. It's a multi-year theme, but the thing is that between now and the election results, things are in a slowdown mode. No more fresh orders, etc. Slow to come by, and execution is likely to get accelerated post the new government coming into power in the first 100 days. So I think the theme stands good. But as far as your outlook on the markets between now and election results, I think it's going to be a sideways of a market. Not too much to be expected, on the benchmark index, maybe plus minus 5%. But the broader market's likely to see a churn. Stocks where illiquidity is a factor is going to be take a back seat, and mid caps, small caps, which are quite liquid, are likely to see some heightened action. Of course, within that space, you could have a logical conclusion that PSU will be in the limelight because these are very liquid names. You don't have liquidity. These names in the broad markets when mutual funds actually are likely to churn their portfolios. So a lot of churn in the broader market, broadly plus minus 5% till the election results.
Manish Sonthalia, appreciate your time. So glad you could join us, and it's really been a very insightful, discussion today. Some of the themes and some of the